All right, let's look at cash basis versus accrual basis taxpayers. And this topic is very important in the CPA exam, not only in reg, but also in FAR. And I have several YouTube videos that help you with the FAR exam, cash to accrual. But this video is specifically for the reg exam. We'll start with cash basis taxpayers, and those in the service sector tend to be cash basis. Think of a CPA firm. They're in the service sector. When they collect money, it's taxable because they're on the cash basis. They may have earned a bunch of money, but they haven't collected it yet, so it's not taxable because a cash basis taxpayer is not taxed until the money's collected. And what about expenses? When can they be deducted? Not until they're paid. So just because you incurred expenses, you can't deduct what hasn't been paid yet if you're on the cash basis. And who's always on the cash basis? Service businesses. Now, there's no deduction for having performed a service and never getting paid. That's the bad news about being a cash basis taxpayer. If you perform a service and then it turns out you're not going to get paid because your customer declared bankruptcy, you don't get a deduction even though you spent the time preparing and performing the service. No deduction for bad debts for a cash basis taxpayer. It's just that the income is never going to be taxed, so there'll be no deduction for bad debt. And then ignore accounts receivable balances for a cash basis taxpayer, since nothing's taxable until received when you're on the cash basis. All right, so look at this question. Dr. Harper is a physician reporting on the cash basis. His beginning accounts receivable balance from patient services was $30,000 in the current year. So that's his beginning receivable balance. He performed and collected $200,000 worth of medical services, and his ending accounts receivable from patient services was $40,000. How much gross income for Dr. Harper in the current year? Well, it says he's a cash basis taxpayer. They tell us in the first sentence. So that means we can ignore the increase in accounts receivable and go with $200,000. That's his income. So only what was received is taxable, which is letter D, $200,000. He's in the service business. They told us he was a cash basis taxpayer, and that's typical of what you might see on the exam. For a cash basis taxpayer, ignore accounts receivable balances. The only reason he has accounts receivable balances is because his office needs to keep track of who owes him money. But for tax purposes, only taxable when collected. How about this one? Roberta is a cash basis chiropractor and collected $80,000 in the current year. She also saw a patient 3 times, but the patient moved out of state, owing Roberta $300, and then the patient declared bankruptcy. How much gross income for her this year? Well, she's a cash basis taxpayer, so that means what was collected, $80,000, is going to be taxable. What about the fact that she earned $300 that's never going to be collected? Is there something we do with that? Is it additional income, that $300? No. Do we deduct that $300 because it's never going to be collected? No, because it's not included in the $80,000 in the first place. We're only including what she has collected because she's a cash basis taxpayer. So the answer is A, $80,000 is what's taxable this year. Note that there's no bad debt deduction for the $300. It's simply not going to be includable in income because she's a cash basis taxpayer. All right, try this one. Let's look at the question stem. How much is net business income for Mason on Schedule C in year 21? So they want bottom line on Schedule C, not the top line gross, but the bottom line net. Mason is a self-employed CPA operating on the cash basis in year 21 and had net business income of $100,000. So is that the answer, $100,000, letter C? Well, it says that's the net business income, but not including the following. Okay, year 21 employee bonuses of $5,000 were paid to employees in January of year 22 for work performed in year 21. So that $5,000 is not included in this $100,000 net business income. Should it be? Should this be a year 21 deduction since it relates to work performed in year 21? No, because Mason's cash basis. and this payment was made in January of year 22. So ignore this $5,000. We're still at $100,000 for net business income. In addition, a customer who Mason prepared a tax return for back in year 19 finally paid Mason the $1,000 owed. Now, is that going to be included in year 21 income? Sure, it should be, because cash basis, it was collected in year 21. Even though it was earned in year 19, this is a cash basis taxpayer. Mason's a cash basis taxpayer, so pick up all that was received in cash, including this $1,000. So how much is net business income for Mason on Schedule C in year 21? The answer is D, $101,000. All right, what about accrual basis? Accrual basis taxpayers are very rare because no individual wants to pay taxes on income that has not been collected yet, because what if it never gets collected? So accrual basis taxpayers are those who have inventory sales of more than $26 million for the past 3 years. That's who has to report on the accrual basis for income tax. But you might have someone on the exam who wants to be an accrual basis taxpayer, and they can be if they choose to be. So if the exam tells you that your client chooses to be an accrual basis taxpayer, then income is taxable when earned, and that's sometimes before the cash is even collected. And then expenses are deductible when incurred, and that's sometimes before they're paid. And then the changes in accounts receivable for the year become important because you may have collected more than you earned, you may have earned more than you collected, and while that wasn't relevant to a cash basis taxpayer, it certainly will be relevant to an accrual basis taxpayer. Let's try this one. K is an accrual basis taxpayer who rents out party supplies. So she must have inventory, sales, and rentals. K reported accounts receivable at the beginning of the year of $30,000 and ending receivables of $40,000. Her cash collections for the year were $200,000. How much gross income for K in the current year? And you would start with what was collected in cash, the $200,000. Then you would add the ending receivables, the $40,000. Why? Because that was earned this year. It won't be collected until next year, but it was earned this year. So $240,000, is that the answer? Well, beginning receivables are $30,000. That was collected this year, but it was earned last year. So don't include the $30,000. So we have to subtract 30, otherwise it'll be double counted. So we'll wind up with $210,000. That's how much was earned this year. And for an accrual basis taxpayer like K, that's how much the gross income will be. It'll be based on what was earned this year. So notice that accounts receivable went up from $30,000 at the beginning of the year to $40,000 at the end of the year. Anytime accounts receivable goes up, it means you earned more than you collected. And if you collected $200,000, then you must have earned, in this case, $10,000 more than that. All right, which of the following would result in an accrued expense in year 14 for an accrual basis taxpayer? All right, what's an accrued expense? An accrued expense is something that's incurred this year, paid next year. So for an accrual basis taxpayer, that would bring upon a deduction this year, even though it wasn't paid yet. So we're looking for that. We're looking for something that was incurred this year, paid next year. How about one? A repair completed prior to December 31st, year 14, but not paid until January 3rd, year 15. Number two, a contract is signed for work to be repaired in December of year 14, but no work is started until January 3rd, year 15. What do you think the answer is? Leave me your choice in the comments section after you like and subscribe. And if you want to learn more about cash to accrual basis taxpayers, or you need any help passing REG or any other parts of the CPA exam, get the #1 course supplement, I-75, and get on the right road to passing the CPA exam.